Good afternoon, everybody. I am Dr. A. Nagalakshmi, Assistant Professor, Department of Commerce with Finance in Dr. S.N.S. Rajalakshmi College of Arts and Science, Autonomous, Coimbatore. So, I am here to present you this PPT under the course Insurance Management under the topic Risk. So, any financial plan must take into account the possibility of risk such as disability and premature death may occur and aim to eliminate them or minimize their effect. A systematic approach should be taken to identify and manage these risks. Now, we are going to see what is meant by risk and the types of risk. Speculative risk, it's a type of risk arises where there is a chance of a loss or a gain. Speculation means it is a type of gambling. The chances of winning or the chances of losing is there. So that risk is said to be a speculative risk. Example, gambling. One of the bet is placed. There can only be a win or a loss. One person. So, two persons involved in betting something. So, one person in that bet will win and the other will lose. Setting up a business. The business will succeed or fail. Pure risk. The next type of risk is pure risk. Pure risk arises where there is only a possibility of loss or no loss. So the categories of pure risk is personal risk and property risk. Liability. Common law, example, negligence. Statutory law, that is faulty product. Contract, that is construction. So here the liability is a risk, liability risk. So the three types of liability is common law, statutory law and contract. What is meant by risk management? The risk management process can be divided into three broad steps. One is identification and evaluation of potential risk. That is, identify possible losses and their cost. So, the risk is to be. So, risk identification and evaluation of potential risk means, so we have to find out what is the risk. If the risk happens or if we are going to meet a risk, what will be the estimation of the loss due to that risk has to be estimated. Management of identified risk. So if the risk occurred, now we should be in the position of managing the risk, that is seek to avoid and minimize risk. We come to know that we will be going to meet a risk. So if we come to know that, we should be in a position to minimize the risk. Next is program review. Regularly reassess to ensure ongoing protection. So we know if we are starting a business, the business involves risk. So we have to reassess, we have to analyze what are the risks we will be going to meet in certain stages of the business. So that should be properly reviewed. Principle of utmost good faith. Principle underlies contractual relationship between the insurer and the insured. Here the insurer means the insurance company. Insured means the person who is going to make the insurance in that company is said to be insured. So here the principle of utmost good faith comes under the contractual relationship between the both parties. Highest degree of honesty imposed on both the parties. Here the insurance company has to give a proper clarification to the insured in order to make a decision whether to insure or not, what to insure, to how much it should be insured. So they have to give a proper information like that. The insured, the person who is going to take insurance policy, who is going to insure himself or his property in the insurance company, he has to give proper material, that is what to say, not a proper, it should be a true information regarding the property or himself. Duty of disclosure of all the material facts. So both parties has the responsibility and the duty to disclose all the material facts regarding the insurance. Absence of disclosure of a material fact by the applicant may result in contract becoming voidable at the point of the insurer, or reduction in the insurer liability upon a subsequent claim. So if a proper information or the true information is not given from the side of the insured, the policy may sometimes become voidable. It cannot be sued, it cannot be taken to the it cannot be considered as enforcement of law. Misrepresentation of information provided to the insured may be categorized as being either innocent or fraudulent, or different contractual outcomes arising from the categorization made. Thank you for patience listening.